Hey everybody, welcome back. So I want to do a fun little video here and ask you guys, is the market rigged? Well, in some ways, yes. And I'm going to explain to you what I mean by that. Not exactly rigged. Okay, so back in the day when I was a floor trader, we used to have a saying: you never want to do too much size that you become the market. Okay, so never become the market. Okay, so occasionally people they take on a lot of size, they drive price in one direction, and they would become the market. Now that's a bad situation, because what has to happen if you have too much size and you become the market is you have to drive prices a lot higher than you normally would in order to take profits. Why? Because when you eventually take profits, if you represent most of the volume, you're gonna, when you turn around and sell all that warehouse risk, you're really going to cause a flush in the market. Okay, so you never want to become the market. Now, why do I say that? Currently, right now, I believe that the market makers, the Citadels, BlackRocks of the world, I believe they have become the market. Why do I believe that? Well, because if you follow dealer positioning, and in particular, I'm going to highly recommend the site Volland to you. I use the site for the last year and a half. It's so good. I'm on the $1,000 a month subscription because the power of what this thing shows you is crazy powerful. Okay? So when you sign up for Volland, you can look at all the different various Greek exposures. All right, and in particular, one of the tools we use every day is the charm exposure. And what charm is actually saying is that if we take a look at this structure right here, this is what we call a GEX day. It's saying that dealers have a tremendous amount of exposure to the downside, and customers or their buyers are the ones that are shorting the market in this particular case, okay? So dealers are incentivized, if you will, to keep price higher, and because customers are too short, basically, is what it's saying, okay? Now, every day since October, we have had this paradigm saying that we need to be following the dealer's exposure. And every day since October, people have been buying and buying and buying and buying in Volland, just making a fortune. Okay? Now, that being said, let's get back to a price chart here. Okay, so if I see that the Citadels, the BlackRocks, the market makers are exposed to the market since this parabolic move in October, why do I believe that they have become the market? Well, whenever somebody becomes the market, the phenomena happens where you won't see any profit taking. Right? Their buying has overwhelmed this market. Okay? And you won't see, hold on guys, I just got to put an order in here.
Order submitted.
Okay. You won't see profit taking. Right? And that lines up with everything that I'm seeing inside the Volland Greeks. There's no profit taking. Now, what do I mean by that? Okay, well, whenever you have, even in this market, let's look at this parabolic, this market here that just went higher and higher. You can see the slope of this move is, what would you estimate that at, right? If this was the y-axis down here. Look at the angle of that move, okay? Versus this move since October, right? This is parabolic, right? This is parabolic. Very, very different market. But even if we go back to that move, what you will see is you will see profit taking. Profit taking is accentuated by these sharp drops, rise higher, sharp drops, rise higher, sharp drop, rise higher, sharp drop. Okay? We don't have that right now, right? We don't have that. And even in this market right here, if we take a look at this sell campaign, profit taking, sell, 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 profit taking, sell, 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 profit taking, buy, 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 profit taking, buy, 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 profit taking, buy, 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 right? And then we actually had some more profit taking here. But this move right here is parabolic, meaning that this is indicative of one or two players that have all the exposure and nobody else is profit taking. Now, how do these moves resolve themselves? You're all asking, right? Well, they usually resolve themselves in a very, very, depending on the slope of the parabolic. In this case, it's extremely high. You can see this slope right here, giant down move, right? The steeper the slope, the higher the probability and the higher the likelihood that the correction will be substantial and fast. Why? Because it's one or two players that are carrying all the risk. And when they finally do decide to dump, and by the way, don't ask me when they're going to dump because I don't know when they're going to dump. I'm not saying, it's going to happen tomorrow. I'm saying that when it does dump, it's going to be an asymmetric move lower, right? So what I have done is I've taken a couple of, I'd say probably a bit too many. I've taken a couple of shorts with very, very small risk because when I do get that move, the asymmetric risk to return is going to be absolutely phenomenal. Okay? And as you can see today, even today, Voland has been saying higher, higher, higher all day long, right? And you can see that's exactly what we did. Higher, higher, higher all day long. Okay? All right. Now, what else was I going to say? So when will that move happen? I don't know. Is the market rigged? No, but sort of. The market, someone big has become the market, and because I'm watching these zero DTE flows every day, I'm very, very convinced that it's just like BlackRock or Citadel. Hopefully, they don't come and kill me, but it's not about a conspiracy of any sort so much as it is a observation of the observation of the fact that the zero DTE have become such a large percentage of volume that it's a natural phenomena that's happened. Okay, guys, hope you guys enjoyed that video. And by the way, one way, how do we play it? Very simple. The best way, the safest way to play it is when this happens. The safest way to play it, remember, they're going to dump risk. And by the way, in Voland, you can actually go and see the actual amount of risk they have. And currently right now, they have $453 billion worth of risk. That's a billion. Okay, so there's almost $500 billion worth of warehouse risk that the players have. Okay, when that does come off, it's going to be epic. So what you want to watch for, if you want to play it the safe way, if you don't want to take some shots, You watch for that big move down, and it will be big, and it will be fast, and it will be brutal. And then you wait for a retracement, come down, retracement, come down again. Okay, that's the safe way to play it. If you want to take a few risks and really get like an asymmetrical return, you can try shorting, a very small size with 1% risk, right? Or 0.5% risk. And that will, when you do get that move, the risk to return will be like 20-1 if you can nail the top. It's not easy to do because nobody knows exactly when they are going to decide, okay, our books are too full and we've decided we're going to, empty the book right now and just get out of the position. Okay guys, hope you guys enjoyed that market and hope that video, and please stay safe out there. I will put a link in the description for Volland, give you a 10% off any one of the subscriptions that they offer. Okay, thank you guys, and bye for now.